Guys, welcome to the revision videos. The first video is of the first chapter in your book, which is called what? Basic concepts and definitions. Everyone has to participate. Your voices will not be recorded, but it's a good thing that you can practice. Guys, is there a need to collect tax? Yes, the government needs the money to spend on various things like healthcare, bridges, roads, railways, etc. And are there two different types of tax? The first one, DT, and the second one, IDT. Guys, can we differentiate between them? Direct tax is on your income. Indirect tax is on your consumption. When you study GST in your portion, you'll understand that. Next, direct tax is under the income tax. Indirect tax is GST. Direct tax is progressive, because the more you progress, the more you pay. Indirect taxes is regressive. Basically, the poor and the rich both paid, so poor get poorer. Guys, which has a wider base? GST. More people consume, more people pay, which has a smaller base, DT. And from a government's perspective, guys, both are equal children because they both contribute 50-50%. Now, guys, in your new portion from May 24, GST is also 50 marks and DT is also 50 marks. Next, guys, who levies the GST? Or sorry, who levies DT? There's a Ministry of Finance, Department of Revenue and CBDT. There's an Income Tax Act of which year? And Income Tax Rules of which year? 1962. Of course, the act is divided into sections, subsections, etc., which we'll keep looking at and we'll keep by hearting the important ones. As you don't need to by heart every section, but for every chapter, I will tell you which sections are important and those sections you have to by heart. Yes. The act is modified every year. Is that true? We have something called the Finance Act, also called the Budget, guys, which applies to your year. 2024 exams, which budget 2023 applies. Circulars are issued by CBDT, not important, guys. Notification are issued by central government, not important. Case laws are not applicable at which level, guys? CA, enter. And now let's see the different persons. Guys, is everyone taxed the same in India? No. Guys, I'm an individual, you're an individual, we are taxed differently. Yashas Academy is what? Partnership firm. Reliance is what? Company. My family HUF is taxed. Everyone is taxed differently. So the starting point is knowing who you are. So the first person is called what? Individual. Minors, majors, even people who are lunatics, guys, or deceased persons also may have to pay the tax. You will see ahead as we move ahead. Yes. HUF. Members include what? Karta and co-partners, including women. It is a distinct entity only for what purpose? Tax. Otherwise, it's the same, guys, family entity. But tax, it will pay its own. It has its own tax and it has its own PAN number. Next, partnership firm, guys. LLP, are they different? Yes. But from a tax perspective, the same. Guys, each will have its own PAN and they will pay their own taxes. What about share of profit and all? We'll see ahead as we move. Next, can we have an Indian company? We also have a foreign company. Again, just like Indian companies, Tata Motors, foreign companies, Tesla. Will they pay their taxes in India? Yes. Or will they have their own PAN? Yes. Next, AOP and BOI. Very important, guys. AOP is what? Persons. Can any persons become part of it? Yes. Individuals, companies, anyone can be part of it. And guys, is it intentional made? Yes, to make profits, guys. Example, me and Yashas Academy coming together to run crash course classes. Guys, who will pay the tax? AOP, they have their own PAN and they will pay their own tax. And BOI, is there a difference? Only individuals. And that is not because of intention, it is operation of law and they pay their own taxes, but both of them are very similar to what, guys? Partnership firm. If I put a profit sharing ratio here, what will it become, guys? Partnership firm. Local authority is like a municipality and they are also called artificial jurisdictional persons. Yes. We move now ahead. Each of the above persons pays their own taxes and have their own PAN number. All right. Guys, what is a beneficial interest holder? Someone who holds 10% or more in equity or 10% or more in profits. What is substantial interest? Someone who holds 20% or more. So if I have 50%, guys, am I both? Yes. If I have 15%, beneficial. If I'm 5%, nothing. All right. We'll see what the impact is. Guys, what is the previous year? The year you earn money. What is the assessment year? The year you are assessed. And each of the years is called what, guys? Financial year. And calendar year is the one where you celebrate the new year. For your exam, guys, what is the previous year? 23, 24. And what is the assessment year? 24, 25. In case of a new entity, guys, can I start a new business today, 1st September? Let's say September month, I want to start. Yes. In the first year, it will not start from 1st April. It will start from which date? 1st September to which date? 31st March. After that, regular. Yeah, only the first year is the difference. Next, assessment means checking. We discussed this at CA final only. Next, guys, income, we'll see ahead. Or some of these parts come in different chapters, so we'll see them ahead. Guys, are there some steps to calculate tax? Yes, first one. Legal status, who you are, that will define. Second one, essential status. Next one, scope of income. How many rooms do we have, guys? Fine. In each room, can a person have incomes? Yes. And because you have incomes, guys, give and take, the government says because you're offering us income to tax, we'll offer you it. But remember, guys, it should be linked. Can I minus my flight tickets to come to Bangalore from my income? Yes. But can I go for a holiday to Kashmir and minus it? No, because that is not linked. Next, I will have five heads of income. Please tell me the first head. Salary. The next head. House property. Next head. Business and profession. Next head. Capital gains. And last one, IFOS. Only open the room if there is income, otherwise keep it locked. In each room there will be income and there will be, and the net income will be walking out of that room. They all meet in a funnel, guys. Do you remember that? And they will go to where? Clubbing of income. Guys, if it's your income, who should pay tax? You. If you artificially transfer that income to someone else, will that dog come back to you? Yes, that's called clubbing of income, addition of income. Next, can you have losses? Guys, very, very nice. Losses are not good, but they're actually good in an indirect way, because can you set them off? Yes, so if my profit is 100, loss is 20. Guys, I will pay tax only on 80. Excellent. And if I can't set it off this year, guys, will it go waste? No. You can carry them forward. But just like the cake in the fridge, you can keep it in the fridge, but you can't keep it forever. You have to use it very soon. Next, guys, which number do we come to? Gross total income. It's a very useless number because you don't pay tax based on that number. But after that, guys, what do we have? Deduction under which chapter? 6A. And after that, we have the hero number, which is called total income. Based on this total income, you calculate tax, which is paid either through advance tax or TDS, TCS, or self-assessment tax. And finally, you'll tell the story to the government by filing your return of income. Guys, remember, this is the first chapter. This is something called rates of tax, which we will do in another chapter dedicated. But remember, guys, every step we move ahead, every chapter we do, watch these revision videos and revise so that it gets better. We'll have revision videos generally for all chapters. We'll revise it here only, just like this. Yes, thank you. Perfect. All right. So that was the chapter. Guys, I've kept the first session very, very basic, very, very simple, and very, very easy. Also, we're getting used to the way I teach. I'm getting used to the way you learn, and we are getting used to the way DT is for CA intro. Yes. Now we take a break. It's 5:35 almost. We come back at 6:05. Is that good? Yeah, 6:05 around that time, and we continue. Guys, once we come back, we have a new chapter waiting to be open. Yes, we'll see that in half an hour. Thank you. Drive, which will have links of all these videos, everything. Yes. All right. So an exempt income, a chapter which is important from a DT perspective. It is spread out throughout your chapter, throughout your paper, and you'll find lots of places where there will be exempt income. Guys, overall exemption means, is it taxable? No. Everyone has to participate. Is it exempt income means taxable? No. So will it enter your computation at all, guys? No. It will just wave out from outside and leave, guys. That's called exempt income. Are deductions different? Yes. But right now we are only talking about what, guys? Exemption. If you ever forget in the exam, guys, section 10. Next, guys, we'll do the first one, which is which income, guys? Exemption from agriculture income. We'll discuss that once we finish this revision, guys. Next, section 10.2. Guys, do you have an HUF? Are they paying their own taxes? Yes. And when they distribute the share of income of members of HUF, will it be taxed again? No. Why? Because HUF has already paid the tax. Next, 10.2A. Class bench, guys, participate. 10.2A. What is 10.2A, guys? Again, guys, partnership firm, have they already paid the tax? Yes. So now, guys, when the partners get the share of profit, I'm not talking about salary, I'm not talking about interest, I'm only talking about profit. And when that profit is received, guys, will you tax it again? That is exempt under which section? 10.2A. Next, guys, 10.4.2. If in the exam they say that you have an NRE account, which account? NRE, non-resident external account. Then, guys, the interest that you earn from it, will it be taxable? No, it will be exempt. And when that non-resident comes back to India, guys, will it still be exempt? Yes. You can't add. But guys, can we today go and open this account? No. This is only for non-residents. Excellent. Guys, 10.6, not 10.6.2, only 10.6. Guys, do we have people working abroad? One guy in UAE, one guy in France. Guys, are they taxed differently? Yes. So we requested the government that we will tax our people. And that will come ahead in the next chapter. But the foreign governments, like the French government, also said that we also have some people working where? In India. And they also want to tax their people. So shortcut, we tax, they tax, their people. So guys, if they are going to tax their people, then we have to exempt them under which section? 10(6). Remember, this only works for governments, not private companies, guys. Next, guys, 1010 BC, big calamity. Kerala floods, guys, house got destroyed. You got some money. Will it be taxable? No, it is exempt under which section? 1010 BC. Next, guys, section 1010D. As people not participating, I want to talk to you guys after the class, guys. Why you not participating? 1010D. D is for death. This is money received from what? Life insurance. Guys, in case of life insurance, unfortunately, if it's death, whether low premium, high premium, doesn't matter, guys. Is it exempt? Always exempt from death. Guys, if all the premiums are low, all premiums have to be low, then again exempt, and we are talking about exemption. But any premium high, so this will come again in two other chapters when it's taxable. Guys, now what is low premium depends on when you've taken the policy. If the policy is taken after which date, guys? 1/4/2012. Excellent. Then what percentage, guys? 10% of sum assured. That is low, up to 10%. So if the sum assured is 12 lakh, then 1.2 lakhs. Every premium you pay should be up to 1.2 lakh. And the policy is taken before, then 20%. As for disabled person, it changed in 2013 and 20 only became 15 for them, thankfully, guys. If the premiums are low, congratulations, no tax when you get the money back. Next, guys, 1011A, which is at Sukanya Samriddhi account for a girl child. Guys, will you contribute money? When you contribute money, there's a separate benefit. But right now, you are withdrawing, and when you withdraw after the stipulated conditions, etc., that is exempt. Next, 1012A and 1012B. After and before, guys, at CCD, they created which account? National Pension Scheme. And in that account, guys, can you put money? Can your employer put money and you get interest? It's like a bank account, guys, and that money should be used only on retirement. If you withdraw before, whatever you withdraw first will be added. Exemption only of your self contribution. Excellent, guys. And if you withdraw after, again it will be added, but 60% of total amount will be exempted. So remember, guys, before only 25%, after 60. Before only self contribution, after total. Next, guys, 10 12. This, guys, we'll talk about it tomorrow. 10 15. In 10 15, guys, do you have a post office savings scheme? Yes, and when you get money from that scheme, guys, the interest up to 3,000 will be exempt. Rest will be taxable. And if it's a joint account, 7. 10 16 is scholarship. 10 17 is allowance received by MLAs, MPs. That one is exempt. 1017A we've not discussed, but these are like awards or literary scientific awards. That same like scholarship, guys, you're getting these awards. 1018 gallantry award. When you receive any gallantry award, we're not talking about the award. We're talking about those people getting pension and family pension. Guys, these people have done something good for the country. Let's not tax it. But a myth is pension is exempt. But that's a myth, guys. Pension is actually, but because it's below that limit, guys, of basic exemption, we don't pay tax. But otherwise, for these guys, it will not be taxed. 1019 Jawans, guys, armed forces people, if they lose their life or they become permanently handicapped, then the pension or the family pension they receive, do we want to tax it? No. Let's show some humanitarian grounds, guys, for these people. Next, 1026 AAA, income of Sikkimese individuals. Above. Excellent, guys. Guys, income from all sources within Sikkim and dividend interest from across anywhere but in India. Next, guys, 1032. Guys, please, people should have a children for the sake of having children, not for tax benefit. Because, guys, what is the only tax benefit? 1500 per child whose income is club. Only 1500 you will get, guys. 1034, guys, is that dividend? Has it been removed now? To compensate, they put 1034A. Guys, here is the company buying back share. DMart buying back the share for 1600. Are you making money? You're a shareholder, but lakhs of shareholders. Government says who will catch them? Instead, catch the company. So who makes the money? Shareholder, but the company pays the tax. These rates, etc., will come in rates of tax. Don't worry. But who will pay the tax, guys? Company. All right. 1037. Guys, I have an urban agriculture land. If I sell it, tax. But if it's compulsorily acquired, it can be exempt. Two conditions. Only for individual and HUF. And the last 2 years, prove it that you've used it for what purpose? Agriculture purpose. People there and there. I want to talk to you all why you're not contributing in the class, guys. Next, 1043 reverse mortgage scheme. Guys, are you giving the papers to the bank? Every month, guys, are they paying you back? But that's not an income, that's a liability. Guys, this reverse mortgage means your bank papers go to the bank, they give you money, and at the end, guys, they take over your house. Whatever money is recoverable, they remove it, but that's not the point, guys. The money that you get every month, is it taxable? No, it's exempt because it's a liability which you need to pay back. Guys, remember this is not an exemption, this is a deduction. Remember Kalpesh laptops. Yes, guys, where did he go? SEZ, and he started exporting. Is the government thankful to him? So for 15 years, how many years? 15 years, the government wants to give you a benefit. First, every year you calculate export percentage profit. Export percentage 60%. Profit 10 crores. How much is it? If you're in the first 5 years, next 5 years, and last 5 years, with a condition that if you want, let's say example 2 crore, if you want that deduction of 2 crores, you have to invest that 2 crores into a separate account called RRA, Reinvestment Reserve. What is this account? First, put 2 crores. If you put 1.5, 1.5. If you put 2.5, and that amount has to be reinvested into your business, buying new plant and machinery in the next 3 years. If you don't buy or you buy something else, guys, then it will be tax. And guys, you cannot give this money abroad. You cannot pay this as dividend. And remember, whenever you're doing 10A calculation, if there is any freight, insurance, and telecom. If it's part of your sales, minus it from both export sales also and total. And remember, for this deduction, your focus should be only on one number, which is SEZ. Can Kalpesh laptops be also outside SEZ? Yes, but focus on which numbers? SEZ numbers only. Yes, total deduction for how many years, guys? 15 years from the year you start. Next, guys, agriculture income. Let's do that also. Everyone, agriculture income are two kinds, RAL and UL. Guys, if I cultivate and sell, exempt. If I rent for agri purpose, growing flowers, creepers, seedlings, saplings, bamboo, exempt. And guys, what if I sell that land? Not tax. It's not exempt, but it's not tax. And guys, income from farm building, exempt, guys. But if the moment it is UL, guys, that means it's the same thing except two. What are the two changes? S, B, or BS? Income from farm building is now tax. And you know, guys, urban agriculture land is in urban areas very valuable. So if you sell it, is there tax? Yes. Now, guys, what is urban area, guys? If you are in a very populated place, more than 10 lakhs, then up to how many kilometers? Otherwise 6, otherwise within the municipal limits, guys. You know the population, and if you know the urban area, outside of it is rural. Anything urban, outside of that is rural. Next, guys, all cultures like is not benefited, only agriculture, and of course floriculture also. Guys, what about dairy farming? Taxable. Poultry farming, sericulture, taxable. Beekeeping, sandalwood, timber, taxable. Next, guys, is there composite income? Tea business, Rule 8, coffee, 7B, rubber, 7A, and potatoes to chip, Rule 7. 7, Rule 8 says what percentage? 40 PGBP. Coffee, 40. But coffee is only grown and cured, and rubber, guys, is 13. Remember, this split is not of the sales, it is of the profit. And guys, whenever you transfer from your potato farm to your church factory, the transfer should only be at, if you don't know the market value for some reason, cost plus profit. And guys, with the scam 1992 music in your mind, guys, is there a scam happening in the income tax act? Guys, generally people feel the agriculture income is completely exempt, but it's not true. If you are someone who enjoys well, guys, who enjoys well, individual, HUF, AB, and AJP, and guys, you enjoy both incomes, taxable and agriculture, taxable more than Bell, and agriculture more than 5. Then the government says, if you are enjoying so much, we want to scam you. And what is the scam first? They will take all, shocking step. They will take all your income and calculate what, guys? And let's say the tax is 1 lakh. Then step number 2, they will take agriculture income, calm down, they will take agriculture income and well, and they will calculate tax on that. Let's say that is 57,000, guys. Then the balance 43,000 you'll have to pay. But is it slightly higher? Yes, and that's why it's a scam. But remember, guys, I've never been scammed because I don't have any agriculture income. Guys, a farmer has never been scammed. Why? But does not taxable income more than well. So you will be scammed only when you earn both incomes. And remember, guys, will Reliance ever be scammed? No, because it's a company only people who enjoy well. Guys, this is exempt income, agriculture income. Revise this video, move to sums, and do this really well. Thank you so much, guys. See you guys tomorrow. Thank you. Yes, guys, that's a chapter we got to revise. Everyone, from an exam perspective, imagine it's one day before the exam. You want to revise this chapter and you don't want to open the book, etc., and you want to listen to someone and just understand the entire chapter once again. On that note, guys, just doing a very, very nice, quick, and complete revision on this chapter called Income from House Property. Guys, how many heads of income do we have? Five heads of income. One of them is house property, which is the second one. The surgeon bought his house at what age, guys? So this is basically section 22 and onwards. This is the owner, if you are the owner of the house property. Guys, can you have a house property? Yes, when you rent it, you make some income and that's what is taxed. But the name is house property, but it applies even to renting of office, shop, go down, etc. Guys, what is the first thing that you do with a property? You rent it out. That is called let out property. When you let out a property, guys, example, you give a property for 1 lakh rupees a month. That's called actual rent. What is it called, guys? But the government doesn't believe you. They compare your actual rent with what, guys? Expected rent. Now let's talk about expected rent first, guys. There are three values: municipality, figures, standard. So they will give you in the exam. If they don't give you, or whatever they give you, you need to manage with that. Many times they don't give you ER at all. Guys, municipal value or fair rent, whichever is higher. So you have to only see that. So 8 or 9, which is higher, guys? 9. But just check, should be within the ceiling of what, guys? Standard rent. It's like your mom telling you go out for dinner, but don't spend more than 500. Make sure your bill is within that. Same way, make sure this ER is within standard rent. Guys, this ER does not get bothered by unrealized rent, vacancy loss, nothing. So this ER is a final number. Let's take it's a 9 lakhs. Now let's go to AR. What is actual rent? The rent that you've given it out for, but what if you've given out for 9 months, 10 months, then you have to calculate for how many months, guys? Always the calculation has to be for 12 months, and let's say you've given for 12 lakh rupees the whole year, then you start with that. Then can you minus unrealized rent? Yes. Guys, understand this one calculation, all calculations are similar. You can minus unrealized rent where four conditions are fulfilled. Legally vacate other building or our building, rule 4. Legal action, ask him to vacate. No other building should be given to him and it should be a bona fide agreement. Can I minus 2 months of unrealized rent? Yes. What is the next number, guys? 10 lakh. And for just you and me, we'll call it AR2. Now, guys, there's a vacancy loss. Guys, what is vacancy loss? Where there is no LOP, there is no SOP. When you ring the bell, who opens the door? No one. In that case, it's called vacancy loss. And vacancy loss, guys, you can minus only if AR wins. What does that mean? This AR2 should be more than ER. Let's check. Is AR2 more than ER? Yes. How much is that? 10. How much is this? 9. So can I minus 1 lakh or 2 lakhs? Let's say vacancy loss is 2 lakhs. Can I minus that? But once you minus vacancy loss, after that, don't look at ER, guys. That is completely gone. Now, what is this, guys? 8 lakh. Generally, GA is a higher of A or B, but once you minus vacancy loss, GAV has to be AR. That's where we get to GAV, guys. Now, vacancy loss we've understood as a concept. Now, when you get GAV, guys, what is the first thing you minus, guys? Also called what, guys? Property tax. Only if it is paid. Paid by whom? Owner. From 1st April to 31st March, you can minus municipal tax. Guys, what if you pay in advance? You will get. What if you pay arrears? Still you will get. And sometimes it's given as a percentage. Apply the percentage to municipal value. Guys, then you minus, you get what, guys? NAV, net annual value. And this was gross annual value. In the exam, full forms only. So let's say 8 lakh rupees, municipal tax was 1 lakh. How much is the balance, guys? 7 lakhs, guys. That will be your net annual value. From that, 2 deductions and only 2 deductions. Standard deduction at what rate? Guys, what if they ask you to do something more? No. But what if you they say only you spend 20%? Still, guys, how much? 30%. That is example 2 lakh 10,000. And guys, any interest that is paid or payable on which basis? Accrual basis. Guys, interest on one loan, multiple loans? Yes. Fresh loans? Interest on interest. Interest on penalties, etc. No. Guys, interest you can minus without any limit because which property have you had? LOP. Are we okay with this, guys? The section is 24A for ad hoc, 30%, 24B for interest. We'll talk about interest 2 types, guys. Interest can be of 2 parts. Current year you always get how much? Full. Guys, excellent. That's the word. You get always full. But guys, can there be a pre-construction period? Pre-construction means before the house is completed, date-wise or year-wise? And that is called pre-construction period. Will you get a deduction of the interest? but not as a cake, as a pastry. So first calculate PCP interest divided by 5 and you'll get it for how many years? From your birthday year? No. From the year the house is complete and after that, how many years totally? 5 years. Are we okay with this, guys? And the sixth year, what will you get? Only current year. You will not get PCP. Are we okay? And what if there is no construction? I bought the neighboring house which is ready. Then no PCP, guys. PCP is not compulsion, guys. So this is section 24B, that is interest. There is no limit on interest. You can do these sums when you reach your, guys. Now, guys, which property are we talking about? Self-occupied property. In SOP, guys, is this a benefit? Who's staying in this property? You and your family. So what are the numbers, guys? AR 0, ER, GAV. Because you're offering nothing to the government, municipal tax. But what if they say municipal tax paid? Nothing. Ignore. All numbers are 0 except, guys, you can minus interest. So that means, will they allow you a deduction? Yes. Calculate interest the same way. PCP, current year, etc. In the end, where a cap. Is there a capping? Only for SOP there is a cap of how much, guys? Either 2 lakh or per person, guys. This is per person, not per house, per person, depending on 4 conditions. Certified 5 accounts for 1990. Guys, have you taken a loan for the house? Should be taken on or after 1999. Should be only for acquisition or oh, I've taken for repair. Is that a crime? No, it's not a crime. You'll only get 30,000. If it's a construction, it should be completed within, and you should obtain a certificate from the lender, guys. In that case, you'll get how much? 2 lakh. But if you don't get 2 lakh, you at least get, guys, how many SOPs can I have? How many ever you want. But for tax purposes, only two. SOP 1, SOP 2. Guys, both will I get 2 lakhs? No. Overall total, you will get how much, guys? Guys, what if one house I will get 2 lakh, I've satisfied the condition, but here only 30,000. But you will still get 2 lakh because, guys, the government wants to give you that benefit. Yes, this loss cannot be set off. Yes, and hence I call SOP as a benefit. Are we okay with this, guys? Yes, you can have 2 houses, everything is given here. Nice, guys. Can there be house part of the year LOP? Part of the year, what will you take it as? All the calculations, guys. Will you minus municipal tax? Yes. How much interest reduction? Unlimited interest. Unlimited, because you will only do LOP. And you, whenever you take AR, guys, you will always take it for how many months? And the 3 months that you stayed, how much will you take it as? 0. Are you remembering this, guys? Yes. This is a LOP plus SOP. Now, guys, if you are a very rich person and if you have multiple SOPs, any two can be taken as what? SOP. And from the third onwards, guys, whichever you don't take as SOP, and you're not renting it also. If you're renting it out, LOP. But if you're not renting it out, it will be called what, guys? Deemed LOP is also the same calculation as what? Only thing, are you saying is rented out? No. So there will be no AR. ER will be there. All the calculation will be the same as LOP. And the last, guys, can builders hold the property as stock? When they hold it as stock, guys, we are allowing them how many years? After the year of CC, 1 year we won't bother you. Third, second year. But in the third year, whichever houses are not sold, we'll consider as what, guys? Deemed LOP, because we know you secretly hide it and you give it on cash. Guys, that is it. Now we move ahead to section 25. This apportion will take an additional points. In section 25, are you paying interest abroad? When you pay interest abroad, guys, is it coming from India's kitchen? Yes, you know, guys, their income, is it connected to India? India wants to tax it. So you need to deduct what? TDS. If you don't deduct TDS, guys, the entire 3,60,000 will be disallowed. Next 25A. Guys, can someone change their mind? And any unrealized rent earlier, did you tax on that? No. But now, guys, are you getting it back? The year of receipt, repeat, guys, the year of receipt, guys, will it be taxed? Yes. After deducting how much, guys? 30%. Are we clear with this, guys? This is called 25AA for what? Arrears. Arrears means outstanding, but you don't know when you'll receive it. So it will be taxed in the year of receipt. 26, guys. What age will you get married? 26, guys, because that's co-ownership. When you co-own a property, remember co-ownership, guys? Yes. If it's LOP, you will do the same calculation, guys. In the end, what will you do, guys? Split. But if it's SOP, guys, can a husband and wife own a property together? Can they pay EMI together? And, guys, they will each get a benefit of how much, guys? 2 lakh or 30,000, because it is per person. So if there are 3 co-owners, 6 lakh, maybe 4. 8, 7 people in the family, 14. But of course, that much interest you don't end up paying. So in the exam, if they give a co-owned property, which they can, if it's SOP, how many calculations will you do? Separate calculations from the start. Are we okay with this, guys? Yes. Next, guys. Are you saying that's not your house? You've given it to whom? Your wife, guys. Whom have you given it to? Your spouse. You are saying collect the tax from her, but guys, government knows it that it's your dog. Will it come back to you? Guys, will the house come back to you or the income will come back? The income will come back to you except AS. A means she has paid you adequate consideration or there is separation. In that case, who will pay the tax on that? The wife. And guys, if you transfer it to your minor child, guys, do you remember minor child? In that case, what is the shortcut? AM, adequate consideration or minor married daughter. Guys, there are some others like tenancy rights. There is something like impartial estate. There is something like part performance, cooperative society. All that is not important. You can read it either from your notes or from the handwritten notes and finish it off. Not important. Guys, some additional points. Guys, what if renting becomes a business? PGBP. What if I'm renting a plain piece of land? IFOS. Guys, what if one portion is SOP, one portion is LOP? Then a portion means have you divided the house? Now divide the calculation also. How many calculations? Two. One. Which one will you do first? Because everything will be nil, nil, nil. Only interest and that too apportion. Do you know what apportion? Apportion means divide. And LOP also you will apportion. Guys, house with furniture, house with lift, house with watchman, house with generator. Is there some additional amount? That additional amount will go where? And house property will go where? IFH. But if you can't separate, and now, guys, something that you know residential status, guys, if you're a ROR, do you know who's a ROR now? What face will you make? Your face at 12:45, guys. Sad because it's delayed the lecture. Anyways, ROR is unhappy because he will be taxed on global income. So if ROR has a house in London, repeat, guys, if ROR has a house in, will you tax him? Same concept. How many deductions will you give him? Three. That means a house in London is the same as a house probably in India. Same tax because you are an ROR. Are we okay with this, guys? This is a chapter called IFHP. My prediction is that in May 24, also November 23, guys, this will be a chapter. Watch this video with your handwritten notes and look at many, many questions. The more the questions, the more the marks. Thank you so much. Recording a chapter of residential status and scope of income. This very useful chapter will be there whether you're giving the November exam or the May exam or the next November exam, hopefully not. Yes, and this chapter has to be revised because it has a lot of details. So this video will help you revise very easily, very quickly, and will capture every possible detail. All right, guys, is resident and citizen the same? No. Citizenship is basically where you are from originally, and that is your passport shortcut. But in the exam, they will tell you he's an Indian citizen, he's a foreign citizen. Sometimes instead of the word, they'll use national also. If I say he's an Australian national, means Australian citizen. Resident, you'll have to find out, more or less, they'll tell you to find it out. And person can be a resident or a non-resident. But if you're a resident, guys, they are first discussing which scope of income, which section? Section 5. Guys, there are three kinds of people. If you are a non-resident, you are very happy because you're only taxed on which income? Your income. What is D? Deemed. What is E? Earned. What is A? Accruing. On what is E? Are received where, guys? In India. That means you're a non-resident. We won't bother you except 4 times when you receive it, earned it, accruing it, or deemed in India. There's an India connection. Next, guys, if you're an RNOR, resident but not ordinary. Are you still a resident? Yes, but you'll be taxed on DEAR plus. DEAR is same, we just discussed it. What is that plus one income, guys? Any income earned abroad. Repeat, any income earned. But the control, the management or the setup, any one of them, controlled, managed or setup. That is CMS is where, guys? In India. And if you're a ROR, guys, should you be sad? Yes, guys, very sad because not just your Indian income, of course, that is taxable in India, but even your foreign income, example, a house in London given on rent where? In London. Will London tax you? Will UK tax you? Yes, but India will also tax you, and that's the reason you are sad because global incomes are taxable in India. But from an exam perspective, if ROR comes in the exam, every income is taxed unless it's exempt. Yes, and NR and RNOR, guys, it will be a challenge because you'll have to see the India connection. Yes, everyone, remittances should always be what, guys? Ignore. Remittance means what, guys? I'll give you an example, guys. Let's say I earn some income in Sri Lanka and then I transfer it to India, guys, which is the remittance, the part where I transfer it to India. So whether it was taxed earlier or not taxed earlier doesn't matter, guys. If it's remitted, what do you need to do? Ignore remittance. All right. Next, guys, in section 6.1, where you talk about what now? Residential status of individual. 6.2, residential status of HUF. 6.3, companies, and 6.4 is all others. Let's start with section 6.1. You, me, everyone in India, guys, are under section 6.1 if you're an individual. There are two basic conditions. The first condition checks how many years. Only 1 year. First condition, first year, which is the previous year, 23, 24. If your stay in India greater than or equal to how many days? If your answer to this 182 means basically 6 months. If your answer to this is yes, what do you become? Resident. But if your answer to this is no, guys, we don't want to give up so early because the government wants more people to become what? Resident. So we go to basic condition 2. 2 means it goes to 2 periods. Yes, in the previous year, which one? 23, 24, and in the 4 preceding. Preceding means including the previous year? No. Preceding means before the previous year. If your stay in India greater than how many days, guys? 365 years, 60. And guys, do we have to satisfy both? Yes. In fact, I don't even think of them as two separate. I think of them as basic condition 2. These are both the parts of the same thing. So if there are two legs like inter and group 1 and group 2, the same part. And if yes, then what do you become, guys? Resident. Otherwise, we finally give up and make you what? NR. So basic conditions help you become what, guys? Either resident or non-resident. Guys, while this is great, the basic condition 2, there are two exceptions where basic condition 2 will not apply. Do you remember employment and visiting? Guys, what is employment? Indian citizen, only who, guys? Who has left India during the year for what purpose? Employment outside India. As a CA, you get a job in Dubai. But employment also means, guys, working as a crew member on what? Ship. On which ship, guys? A foreign bound ship. Some a ship which is going outside India, not the ship which goes from Mumbai to Goa, guys. Not that ship, foreign bound ship. Are we okay? Even that is work only, even that is employment. And what is visiting? Indian citizen or PIO who are visiting India. What is this PIO, guys? Person of Indian origin. Basically, that means you might be in the US, but your parents or grandparents, any of them, yes, either mom, dad, or Nana Nani or Dada Dadi, any of them, not all, any of them were born where, guys? In India, including undivided India, which was there before which year, guys? 1947. Alright. Next, guys, once you are a resident, non-residents, will we bother them again? No. They are happy, let them be happy, guys. But residents, guys, can they further be classified into what? ROR or RNOR. This classification, guys, is done based on additional condition. Guys, additional condition, the shortcut is AR. What is the shortcut? Additional conditions only for whom, guys? Residents. Only for residents you will check ROR and RNOR. Guys, this is a flashback mode. What is it called? The first additional condition goes how many years back? 10 years. The second goes how many years back? 7 years. In the last 10 preceding years, 10 preceding years, preceding basically means before the previous year, and the last 7 years before this year, guys. In the last 10 years, you should have been a resident for how many years? And in the last 7 years, your stay should be at least, if both are yes, if both are yes, only then you're allowed to cry as what, guys? No. But even if one of them is no, so if the first one is no, don't even check the second one. Yes, so R and OR, guys, if any one of them is no, what do you become? R and O. But the biggest pro tip I will give you, guys, is flashback mode. Very simple. All of you guys are Indian. I'm also here. You're also here, guys. When we look back 10 years and 7 years, what do we see? India. So both our answers will be what? Yes and yes. Elon Musk, if you ask him this question, what does he see? US, guys. So what is his answer going to be? NNN. I use this trick especially for people who leave India for the first time or come to India for the first time. The wording is like that. You will get your answer very easily with these two additional conditions. Now, guys, what is stay in India? Stay in India means the day you leave, the day you and the day you arrive. Guys, they should actually be debatable, but India says the day you leave and the day you arrive will be included in, because the government wants how many extra days, guys? 2 days extra. But guys, if you're working on a ship, where are you working? Are you going out in again and again? Yes. So government has said only for these guys, not for pilots, not for aeros, only for people who work on ship. The day you leave and the day you arrive, will it be included? No, it will not be included. Basically means it's excluded. So you'll have to see a certificate called which one? CDC. It's nothing but like an attendance slip. Moving ahead, guys, there are two amendments. Guys, if you are a non-resident, who are you? The government taxes you on which income? Dear. But sometimes they feel a non-resident can be converted into what, guys? RNOR. Guys, so these two amendments apply only to whom, guys? NR. So that we can convert them into what? And there are two amendments. AIC is the shortcut and AIC2 is the shortcut. Guys, these are shortcuts only for you and me in the classroom and this video. Now, what is AIC, guys? Applicable. This amendment applies only to whom, guys? Indian citizen. If your passport has an emblem, you are an Indian citizen, and your Indian income. Which income, guys? Indian income is more than how many lakhs, guys? 15 lakhs. By the way, definition of Indian income happens to be the same, dear, plus 1. If the Indian income is more than how many lakhs, guys? And what is the condition? The condition, excellent, you should not be taxed as a resident anywhere in the world, guys. You should be taxed, but not as a resident. Then, guys, if all three conditions are fulfilled, what do you become, guys? R and OR. But what if one of them is not fulfilled? Then you go back and you still stay as what? NR. Pro tip, guys, don't use this amendment unless the Indian income is more than 15 lakhs. And guys, this amendment, this first one has a section 6(1)(a), and this is called deemed resident. What is it called, guys? Why deemed resident? This is person is actually what? NR, but we are deeming him to be a RNOR. And now AIC2, guys, doesn't have a section. It's not called deemed resident, but guys, A is applicable. Whom is it applicable to? Indian citizen and PIO. Second amendment, two people. Next, same. Indian income should be more than how many lakhs, guys? And guys, to these people, Indian citizen and PIO, which condition we would not apply usually? Basic condition 2. But now that they're rich, we'll apply basic condition 2. But 60 days will be replaced by what? Can you repeat basic condition 2? Stay in India greater than equal to, replace that with 120. And in the last 4 years, that remains the same, guys. That 365 remains the same. And if all these three conditions are satisfied, what do you become? And if even one of them is not satisfied, you still remain what, guys? NR. Very important amendments in the exam. You will check for the amendments when? When, of course, it's a non-resident having Indian income more than 15. Otherwise, don't even look at it. Don't even think about it. Are we okay, guys? Yes. Do these questions when you reach this stage. Now, let's go to 6.2. 6.2 is for whom? HUF depends on control and management. Guys, only Karta can control. No, even co-partners can control. So don't worry about that. Check the word control and management. If the control and management is in India, resident. If it's abroad, if it's partly in India, partly abroad, guys, think like the government, they want it to be a resident. Guys, this is basically resident. Now, HUF can be further divided into what? ROR and RNOR. But both these guys will be decided on what conditions? Additional, are there same additional conditions? Yes. But whom will you ask this to? Remember, guys, you want to go to Goa. Who has to say yes? Your parents. Same way, Karta will be asked AC1 and AC2. If Karta says yes to both, who becomes ROR? HUF. If Karta says no, who becomes RNOR? HUF, guys. Are we okay with this? This is section 6.2. 6.4 is very similar, so let's do that, guys. Everyone else except companies, guys. Partnership firm, LLPs, all of them are here. It again depends on what? Control and management. Is it the same? Yes. Only thing is there's no further bifurcation here. Control and management in India. Abroad. Partly in India, partly abroad. Excellent. We go to 6.3, which is what? Companies. Guys, companies is very simple. If it's an Indian company, which company? Automatically, what do you become? Resident. Always? Yes, always. So every company in India under the Companies Act is what? Resident. But if you're a foreign company, generally what? Non-resident. But some foreign companies, guys, can be effectively managed from India. Their poem, place of effective management. If by chance the foreign company's poem is written where? In India, then that one exception, guys, then it will be considered as what? Resident. Otherwise, foreign companies is generally what? Non-resident. And guys, with that, we come to section 9, which are deemed incomes. Guys, generally, do we need a lot of money in India to tax? Yes. But sometimes these incomes, the people say we'll pay tax where? Abroad. We say no, we see a small connection with what? India, and we will tax these incomes. There are 8 such incomes, guys. ISSB, IRF gifts. Under which section? 9.1. These are all subsections, guys, or clauses. And remember, these incomes are only seen for whom, guys? Non-resident. We'll go the same way we've studied, guys. First, salary. Salary earned by whom, guys? Non-residents for services rendered where? In India. Remember Japanese metro? Yes. Next. Salary. Paid by whom? Government of India. Two people working abroad. We tax. So guys, even though they're abroad, we will tax their income in India. That is, we tax our people. Next guys. No, sorry, dividend. Dividend from which companies? Is there an India connection? Yes. Next, guys, interest, royalty, and FTS. We are doing all of them together through this diagram. Guys, who is earning the interest? Royalty and FTS, all is earned by whom? Non-resident. If you are earning it from whom? Or from whom? Or from Government of India. We can tax this, guys, interest, royalty, and FTS only if it's earned, sorry, only if it is used in India. Usage will not be checked for whom? When Government of India is paying, usage will not be checked, automatically we'll tax it. But remember guys, if it's interest, it is what guys? Paid by whom? One non-resident to another non-resident. It will be taxed in India only if it is used in India for one purpose, business and profession, and others will be for two purposes, business, profession, also income generating activity. Business and profession means your regular business, income generating activity means investing in shares, etc. That is IRF. Next guys, you know what is royalty? Royalty is earned on patent, and FTS is earned on technical services. And last guys, gift. If you like gifting and you gift someone abroad, whom are you gifting? Someone abroad. More than how much? Then that could be a problem, guys. That will be taxed, but not in your hand. In whose hands? That person abroad. So they will say, no, no, I don't want this gift, guys. If you are gifting, let's say 2 lakh, how much will be taxed? Not the excess, the entire 2 lakh will be taxed in the hands of the non-resident. But iPhone, etc. is allowed. This is gift of property. What is property? You'll know from the definition of IFOS. Right now, guys, it's a definition of what? Property. And last, guys, is 911. Is there an income? Remember OnePlus China? Did they have a business connection in India? What is a business connection? An agent who is dependent, who can sell, who can stock, who can negotiate and conclude contracts. OnePlus China is so smart, they don't directly come to India, they appoint that agent. But if that agent is dependent and he has these conditions, he will be considered as what? And through that business connection, whatever income you earn, will it be taxed in India? Yes. This is very nice, 911, but it does not apply to some people, guys. What is the shortcut? India exports news, movies, and time. Guys, the activity of purchasing and exporting. Guys, that will not make the foreign company taxable in India. Remember Gucci? Yes, Gucci will not become taxable in India. That agent will be taxable. He purchases the buttons for 1 lakh. How much? Sells it to Gucci for 5 lakhs. How much is the profit? Will it be taxable in India? Yes. But because of this activity, will Gucci become taxable in India? No. Next, guys. Getting what? BBC, don't worry, we will not tax you because of this news. Movies shooting in India will not tax the foreign directors and producers in India. And showcasing what? In an exhibition. Showcase the diamonds in exhibition. Don't worry. If you get some business from India, we will not tax your entire foreign income in India. Even if you are a business connection, we will tax which income? Only India attributable. That means, guys, if OnePlus China has 90 crore income where? China. 10 crore income where? India. We'll only tax which part? 10 crore. Excellent, guys. This is what this chapter is all about. Let me check anything else. This will be tackled in a chapter called IFOS. Guys, these are all the ICI sums, Jan 21, May 22. Do as many sums as you can after you listen to this revision video. Thank you so much. Good night. All right, so guys, doing a revision of IFOS chapter. This one is going to be helpful whenever you revise this chapter. IFOS is a chapter which gets you good marks. We've seen questions from this even in the test yesterday and even otherwise. Yes, so let's try and revise this chapter from your notes. Yes, guys, IFOS is income from other source. This is the fifth head of income. Yes, but do it before you do PGBP. Guys, there are few sections here, but there are three parts in this chapter. The first part is general, then there is gift tax, and then there is dividend tax. Although, guys, while we know PGBP and IFOS are very similar, so the better you do IFOS, the better it will be for PGBP. All right, guys, in PGBP and IFOS, both can we choose the method of accounting? Yes, one is which one? Accrual, and one is cash. In cash, you follow cash. In accrual, we follow the year. We'll come to the general part later, guys. First, we will go to gift tax because that was what we started off studying also. Guys, gifts are of two types, and you always want how many gifts? 10 gifts. So the section is 56 to 10. One are free gifts. When you get a free gift, guys, only if they are valuable more than how much? 50,000 does the government want to tax. So there are three steps to it. What is the first step, guys? It should be in the nature of property. What is property? MISB, sad job. Please tell me the full form. Money, immovable property, shares and securities, bullion, sculptures, archaeological collection, drawing, not important, and jewelry, art of work and work of art. So basically the ones which I'm booked in the box, these are the ones that are asked in the exam. Most common gifts in the exam are gold, are land, house property, money and shares. Yes. Next, step number two are those situations which you are getting valuable gifts but you will not be taxed. And step three, guys, is MMI. You divide all the properties into three categories: money, movable property and immovable property. And money, if the aggregate money that you received is more than how much? 50. If the aggregate movable property like gold shares is more than 50, and the aggregate immovable property, no, individual immovable property is more than how much, guys? 50,000. So for immovable property, you'll see stamp duty value. For shares, etc., you'll see fair market value. That means only if it's more than how much, guys? 50,000 will you be taxed? Yes. But there is step number two, where those situations, guys, where don't tax tip and COVID money received from LAH. Guys, if you receive property on death or on inheritance, if you receive it from a trust, from a fund, or from a local authority, guys, PM, HUF gets partition. Who gets the property? Members. The members will not be subject to any gift tax. Next, guys, in COVID, hospitalization or COVID death. COVID death, what is the limit, guys? 10 lakh. Unless you receive it from the employer, then no limit. And the money should be received within 12 months of the death. Guys, congratulations on your marriage. If anyone gives you valuable gifts, then you'll not be taxed, but you should getting married and you should be getting the gifts. And how many relatives here, guys? 232. This definition is only and only for which gift tax. We'll see the definition ahead. So that is gifts. Next, guys, benefit. Guys, when does benefit happen? Can you get a 1 crore house for 60 lakhs? Can you get 10 lakh property, jewelry for 2 lakhs? So whenever the inadequate consideration, what is the consideration, guys? It leads to B. It leads to what, guys? Benefit. So in the exam, this is very common, guys. Inadequate consideration, you're paying 5 lakh shares for how much? 3 lakh. Is there inadequate consideration? You have to check for what, guys? Benefit. We just add one more step here, step 0. Step 1, step 2, and step 3. Step 0 is what, guys? Benefit. Just calculate and keep it ready. Step 1, it should be in the relation to property. Step 2 does not apply here. And step 3, guys, it's only movable property if the benefit is more than. So, guys, are you allowed to bargain for the jewelry piece? Yes, but don't bargain for more than 50,000, otherwise it will be taxed. And guys, for immovable property, are you allowed to bargain? Yes, A or B, whichever is. A is 50,000 only, but B is 10% of sale. That means, guys, if you're buying a house for 60 lakh, you can bargain up to 6 lakh, no problem. If your bargain is for 20 lakh, will it be taxed? Yes, the entire amount is always taxed. Remember, guys, the moment you cross that bridge, the entire amount will be taxable. And remember, guys, sometimes you have more than one stamp duty value. Can it happen? This is very important from exam perspective. Date of agreement, date of agreement. Which one would you want to take? Whichever is lower. Guys, it's like Amazon and Flipkart. Where will you buy from? Whichever is lower. But in this case, you can take date of agreement only and only where one condition is fulfilled. Are you buying? Yes, from someone. Make sure you're paying some amount as a token on or before which date? Date of agreement by modes other than CBC. You cannot be paying cash or bear a check or cross check. Guys, account pay, Paytm karo, GPay karo, NEF karo, RTGS karo, anything except CBC. In the exam, this is very, very important. And now, guys, moving ahead, what is the definition of relative? 2, 3, 2. Two spouses, 3 brothers and sisters, and 2 LAs and descendants. Guys, your spouse, your brother and sister, your spouse's brother and sister, and your parents. Guys, mama, mommy, yes, kaka, kaki, all those, yes, are your relatives. And people above you, people below you. That means your parents, grandparents, etc., children, grandchildren, etc. But when you go to grandparents only, lineal means only paternal, only dada dadi, not nana nani. And even your parents, even your spouses, people above, and of course, hopefully, same children and grandchildren. And everyone in this list, they are plus one. So your brother, his wife, your sister, her husband. Are we okay? And guys, do you like children? Yes, but only your children. Yes, only your children are relatives, nephews, nieces are not relatives. Guys, are cousins your relatives? No. This is only for which tax? And anyone giving you a gift, guys, will you be taxed here? No. For a HUF, guys, who are the relatives? All the members. So, guys, are you a relative? Are you a relative for your HUF? Yes. But as a girl, if you get married, then you become a member of the other HUF. All right. Guys, these are the questions. At this stage, you should be doing these questions either from ICI material or our books, and then you should be going to RTP questions, etc. Guys, dividend is very simple now, guys. Dividend is taxed on a person who receives. If I get dividend from Reliance, will I be taxed? Yes, from DMart and from Facebook also. Yes, I will be taxed. But guys, dividend can be camouflaged. They say that if there is a company, guys, if there is a company which does not call it dividend but call it other names, can it be taxed? Yes, because guys, who has the profit? Remember how much profit? And who wants the profits, guys? Shareholders. Even if you don't call it dividend, we will call it deemed dividend. Guys, in A, what are you transferring? In B, what are you transferring? Bonds, debentures, preference shares, but not even if you give equity shares, guys, that will not be deemed dividend. Next, guys, you're closing the company and liquidation, closing. And last, you're decreasing share. A, B, C, D. In every case, who had the money? Company. Who's got the money? So it will be taxed as deemed dividend, but remember only up to accumulated profit. What if the company has losses? Then it won't be taxed. Only up to profits. This applies to all companies, but the last one, 222E, is here. It's a difference. It's only applicable to closely held company. When they are giving loan to whom, guys? BIH directly or through BET. Remember BET, guys? Or to an entity in which the BIH has substantial interest, basically means 20% or more, or to any third party for the benefit of BIH. So all roads should lead to whom, guys? BIH. And in that case, guys, will it be deemed dividend? Yes, but only up to accumulated profit. Guys, tell me, is loan a tax? Should loan be taxed? No. But here you're just calling it a loan. Actually, it is what? Dividend, because profit has gone from the company to the shareholder. What if you repay the loan? What if you pay interest? So only in three cases, guys, it will not be considered as deemed dividend. BPL. If you're taking a business advance. Remember, business advance is not a loan because used for the what purpose? If the company is a another company is a lending or banking company, guys, that is deemed dividend. That is a concept of dividend. Now we go to the other part, which is the normal part. Guys, are some income generally taxed under IFRS? It's a dustbin section, guys. If you walk out of this class today and you find some money deposited in the bank, will it be taxed? Under which head? IFRS. It's dustbin. But there are some income which will only go in IFRS, guys. Dividend, interest on securities sometimes. Guys, remember composite income, composite rent, house plus furniture. House will go where? Furniture will go where? Remember that McDonald's burger? Guys, you ate a veg burger, but it's a what burger? Non-veg. Did McDonald's pay you? Non-business contract will go here. Guys, remember forfeiture? Someone gave you an advance of 10 lakh, it was forfeited. Is it your income? Where will it go, guys? Remember Keyman Insurance. KT. Keyman Insurance is always taxable. If the company gets the money, if the person gets the money, salary, but if the family member gets the money, IFOS, so it is also taxable here. Dividend has how many direction, guys? Only one direction. Yes. And if I have some spare idle capacity laptop and I rent it, guys, will this be this head? Yes. Casual income, always here, guys, shortcut. If you get lucky, government also wants to get lucky on the same amount. All right. And shares we'll discuss. Welfare amounts are discussed with PGBP. Gifts we've already discussed. Guys, can we have deductions? Yes, there is deduction. General dip. Do you remember general dip, guys? Yes, let's recap general dip. Guys, any general expenses connected to IFOs. DIP. Guys, do you have dividend income? In relation to dividend income, guys, they say we'll allow you deduction, but only maximum how much, guys? 20%. As you've taken a loan to buy what? Shares. That shares has given you what? Dividend of 1 lakh. How much can you minus interest? 20% maximum. It's not standard deduction. It is maximum. Can I minus 22? No. But can I minus 18? Yes. Next, I. Guys, did someone take your house? How much crores did you want? 5. But they paid you how much, guys? 4. Then did you fight for it? And they paid you how much extra? 1. But because they delayed, guys, will they pay you interest? That interest is a taxable under IFOS. But guys, how many 4-5 years interest? But taxable in which year? Year of receipt. So the government says, sorry, we could not tax you in all the years. We're taxing you in 1 year. And because you're forcing tax in 1 year, we'll give you how much deduction? 50% deduction. And guys, pension. Remember PT? Pension is taxable. If you receive salaries, but if your family members receive it, right? When you are no more, family members get family pension. It's taxable under IFRS, but the government feels bad, so they say two numbers, A and B. A is one third of the amount per month. So if the pension is 30,000, then it's 10,000 or 15,000 per month, whichever is. Okay, you're confused. So I'll tell you how to get rid. Is it a deduction? Deductions are always lower. And guys, last, there are some payments which are similar in IFOS and in PGBP. Are you making some payments? Yes, but there's some mistake in them. And hence the government says, I will not give you a deduction. Those are called disallowed. So what are they called, guys? Poor wins cash income. Income tax paid, not allowed. Income tax refund, no. Interest on income tax, no. Guys, only interest earned will go where, guys? IFOS. Next, guys, this is cash. Cash up to how much is okay? When I say cash, I also mean cash. Bearer check, cross check. Up to how much is okay? 10,000 per person per day. If you pay 18, how much will you disallow? Entire, guys, entire 18,000 we disallow. Winnings, guys, no deduction because if you get lucky. Also, once you get lucky at the entire amount, any deduction. I remember Goa gambling example. Can I take deduction for the flight ticket? No. Guys, what if I have a lottery shop and I win a lottery? Still, it will go in IFOS only because that's not my business to win lotteries. Guys, personal expenses disallowed. If you pay excessive, disallowed. And if you're paying outside India, guys, without deducting what? TDS. The government is how much percent angry? 100%. If you pay to a resident without deducting TDS, government is 30% angry. But don't worry. When this TDS is finally given to the government, will you get a deduction? Yes. Guys, one, two small things. Guys, Zepto, can they issue shares? Zepto is what kind of company? Closely held company. This was a question in your test also yesterday, guys. And when you issue shares, your issue price, if it's more than what? Face value and more than fair market value, the difference between issue price and fair market value will be taxed. Who has to pay the tax? Not shareholders, but the company. Guys, issue price 150, fair market 10, sorry, face value 10. Is it at a premium? Yes. And fair market value 140. Guys, what is the excess? 10 rupees. That will be taxed in the hands of the company. This could be again in May 2024. Each of these concepts, guys, are golden because IFOS has reserved 4-5 marks for itself in the exam. So whenever you want to revise IFOS, watch this video first, then go to your handwritten notes, read them back to back, and do as many sums as you can. Thank you so much. See you guys soon. Yes, thank you. 10 incomes of PGP. Yes. All right. So a very important video is being recorded here, guys. I want like 100% participation. Packing bags is great, but revising is even better. This video will be really helpful. I think one of the most useful videos to revise a chapter will be this because it's an elephant of a chapter. Yes. And finally, we are at the top of the elephant now. So we are very, very happy that this is done. Of course, some sums are left, which we will do tomorrow. But right now, a very in-depth, comprehensive, and complete revision of the chapter, which is called what, guys? PGBP. Question number 1, 14 marks will be from here. Of course, there can be more marks also, but this is minimum you will get from this chapter. So let's try and see how well we can do a revision of this chapter. As PGBP and IFOS are cousins. Is it true? Yes. In PGBP and IFOS, they're the only two things where you can actually choose your method of accounting. You can either follow accrual or you can follow cash. In the exam, if they give you accrual system, which they will mostly, you have to follow the year. Anything which is not from this year, you don't consider. But if by chance, 10% chance, they give you cash, then you have to follow cash. Anything that is paid, you will deduct. Anything that is received, they will income. Are we okay? Now, guys, is there a difference between business and profession? Yes, but they both are taxed in which head? So doesn't matter, guys. Now there is a charging section which we call as the income, guys. Please tell me some income which you earn PGBP. Can we put general incomes here? Yes. Guys, associations, can they earn money here? Any business contract. Guys, remember McDonald's was non-business. Here it is business contract. As example, someone did not deliver on time, so they paid you 1 lakh. Where will that go? PGBP. Next, guys, a key man insurance. Remember KT. Key man insurance is always, if the business person gets the money, it is going under which head, guys? PGBP. All right, guys. And any non-compete fee, where does that go? Guys, if you have import entitlements or export benefits, can you use them? If you use them, there is no benefit. But if you sell them, guys, will that be money? Which here, guys, PGD. Guys, partners in a partnership firm, they get salary and interest, which we call as P salary, P interest. Guys, salary generally goes there. Salaries, interest generally goes there. But P salary and P interest will go under which here, guys? PGD. Guys, when you sell your stock, but I don't want to sell my stock. I want to convert it into asset. Even that will be considered where, guys, PGBP. Incomes like these will go under PGBP. In the exam, it will be very simple. Furniture manufacturer, they'll already give you the profit. That means you've already completed all this income bit. Yes. All right. And one more, guys. Any benefit received, guys, will it be added? Only about 50,000, right? No, guys. Any gift, any amount. So even air tickets, yes. Any gift, any amount. Are we clear with this, guys? Yes. Now, guys, the businesses can be of three types. Do you remember this? One is called normal business, guys. Normal basically means non-speculative, like this teaching institute, normal business, or a cafe and restaurant, normal business. Then there is speculative business, where you're buying and selling without taking delivery. Example, guys, can we buy a share today, right now, at 12:15 and sell it at 1 o'clock? What is that income going to be? Speculative business. And then there is a list of specified business, which you will see ahead, guys. Specified business means you are special. Example, that 100-bed hospital. Guys, now there are two exceptions. Guys, remember, bankers and derivatives are normal. That means when bankers do intraday trading, it will go into normal business and derivative transaction. Can you give me example of derivatives, guys? Futures, options, forwards. Those will always be considered as this business normal. But there's nothing called normal. It's called non-speculative business. All right. Next, guys, how to compute PGBP? First, take your incomes, then you minus all the deductions. But any disallowance, can you minus that? No. Next, guys, section 30. Ignore the sections, guys. Yes. Guys, for land and building, can it be used for business? Yes. RRTRI. Rent, rates and taxes, repairs, and insurance. Can you minus it? Yes. But any capital expense? No. That will go to the balance sheet and you'll get only depreciation. Remember, guys, PGBP is going to be your good friend if you don't focus on sections. The moment you start focusing on sections, you'll start losing grip of the concepts. So first, watch this video, do all the concepts, and there is one page on important sections. You can revise the important sections only. Next, guys, can you have plant, machinery, and furniture? Yes. And any relation to that, any expense, can you minus it? Yes. Depreciation. Guys, depreciation we'll do right in the end. Okay, it's come here, so we'll do it, guys. Depreciation is on which assets? Business assets. Yes. Can you take any rate of depreciation? The rates are fixed. Building, residential building, but for business purpose you have to use it. Next, temporary share, 40%. Furniture, very simple, 10%. Intangible assets, 25%. But where the real percentages are, plant and machinery. What is it, guys? Plant and machinery. It can be 15 generally. Motor car, 15. Motor car on 30%, guys. Anything which is good for the environment, pollution control. Books, laptops, 40. Guys, windmills, 40. Guys, life-saving medical equipment, 40. Ships go slow. Aircrafts go fast, 40. And 40 is the maximum rate of depreciation. Guys, depreciation has twin benefits or twin conditions. OP. You should own the asset and you should put to use. That fire extinguisher, yes, because put to use also means passive. Guys, our favorite method of depreciation is what? SLM. But we can't use it here because only power companies will use it, and that too they focus on individual values. That means, guys, if I have an asset for 1 lakh, can I minus it SLM? Yes, only power companies. And if the value becomes 80,000 and you sell it for 82, profit of how much? This profit is called balancing charge. You have to just add it in the exam. And if it is sold for 75,000, loss of how much? You will just minus it and call it terminal depreciation. But this is not important because this is which, guys? SLM. What is most important? WDV. In WDV, we have a family method. That means all the benches here, guys, same type, same rate. Can we add them? We have an opening balance. Then you, what do you do? Purchase. And if you sold anything, minus. Oh, but sir, purchase half your, don't worry, guys. First add purchase minus the sale. Get the final value. And then think, in this, how much is half year separated, how much is full year separated. Are we okay? So depreciation, guys, is always full year. Yes, unless you purchase an asset and put it to use by 4th October, you will still get full year. But after that year, fifth, after 4th October, guys, you will get half year because you're putting the asset to use for less than 180 days. Guys, can there be a sale, amalgamation, merger, reorganization? In that case, you calculate depreciation normally from whenever the asset was used and split based on number of days. All right. Um, that is what it is. Explanation of section 32. Yes, guys. Can some people get additional depreciation? Yes. Guys, only PM, people who are into power or people who manufacture, but only on PM. That is only plant and machinery except MOS, not on motor vehicle, not on office appliance, not on ships and aircraft, and not on second hand. For 20% of the route, not here, guys. Here it has to be unboxed. Here it has to be. Have seen videos on unboxing. It has to be really unboxed. Only then you get a depreciation of much percent, guys. 20 every year on one asset only once. But if by chance this time I've given only 10% because half year, then next time I'll give 10%. All right, let's move ahead, guys. Additional dep is also done. Guys, if I can't minus depreciation this year, can I carry it forward? And that's called unabsorbed depreciation. And the government loves depreciation because you bought a lot of assets. And hence this unabsorbed depreciation can be carried forward for how many years, guys? Indefinitely, that's the word. We'll see more about this in the chapter called set off. Next, guys, block of asset. Do you know what is block of asset? One family, same type, same rate. All the ACs here. Yes, ACs and laptops, same type, but not same rate. So they'll be different block. In the exam, guys, depreciation will be there. Make your concept on depreciation strong. Next, guys, cost. What is the cost of asset? All the cost, guys, listen to me. All the cost till the asset is put to use. But what if I paid cash more than 10,000? That will not be allowed. And you remember balance sheet, there's only one value, guys. What is that? 10,000. Yes, 35,000 is not here. Yes, only how much? 10,000. I'm giving you asset bought in cash 11,000. No, you'll not consider it. While buying the asset, you paid transport 11,000. No, because here only one limit. How much is the limit? 10,000. Guys, any interest paid till the asset is put to use. Capitalize. Any import duties, capitalize, except when you get credit. Excellent. And any subsidy that you get, guys, will be minus. Guys, remember, I have a personal laptop. Now I am capitalizing it for business. Can I do that? Yes, you will not throw away the laptop. And at what cost you will take it? Actual cost, original cost, not right now's value. Yes, but only building. When you introduce it from personal building to business, you will minus notional depreciation. Are we okay with this, guys? Yes. Now moving ahead, guys, everyone. Guys, are you special? When you do what expenditure? Scientific research. Can you do it in-house? Yes. Any capital expenditure, you will get 100% deduction. Remember microscope? But normal people get what? Depreciation. But you are special, so we are giving you flat 100% deduction. So the value of the asset will become what, guys? Microscope is now for zero, except land you will not get. And guys, whatever is revenue expenditure, then in the last 3 years also you will get for salary and raw material. Are we okay with this, guys? Yes. Now comes to when you sell the microscope. Guys, you were supposed to use a microscope for what purpose? Scientific research. But if you sell it on OLX, guys, 2 lakh microscope sold for 80,000. Reverse in PGB. 2 lakh 20. 2 lakh in PGBP, 20 in capital. Alright. And for scientific research, can I donate money? Yes, to SRA, to Indian companies whose objective is scientific research, to USIN. Do you remember USIN? And in that case, how much reduction will you get? 100%. Next, guys. Guys, can you minus preliminary expenditure? Preliminary basically means before you start your business, like guys registering the company, MOA, AOA, can you have deductions there? Yes, the government says I'll give it to you, but I'll not as a cake, as a pastry. So if your preliminary expenditure is 20 lakh, divide by what, guys? 5 over the next 5 years. But guys, there are two conditions. One is project FEM. Can you know the full? Can you tell me the full form? Project report, feasibility study, engineering study, market survey. If this expenditure you are incurring, it has to be an approved source or by yourself. And guys, there's a limit. Limit is 5% of the cost of the project at the end of the year you start your business, 31st March. And if it's capital, if it's a company, then 5% of capital employed, whichever is higher. What is capital employed? Who's paying you money? Equity plus preference plus debentures plus loan, guys. But if it's a foreign loan, only if it's more than 7 years. All right. Next, guys, some companies paying VRS. Is that an expense? Voluntary retirement scheme. I'm not talking on the income perspective. I'm talking on the expense perspective. Will you get a deduction? Yes, you will, but not as a cake, As a pastry, how many installments? All right. Next, guys, can you have a specified business? Are you special there also? Can you give me a list of specified business? Super, fast, bike, can cover 3 hospitals, 3 institutes, 3 workshops. There is a page number where you highlighted those. Just have a look. Don't buy heart it. Just have a look. You should be familiar with those businesses. What is so special about it? You will get 100% deduction except land, goodwill, financial. Guys, but request you to use these assets for how many years? Get yourself audited, and the plant and machinery, if any, should be new. 20% okay, yes, and if used abroad but not used in India, it will be considered new in India. Are we okay with this? Now, guys, this is if there is any loss in the specified business, can you set it off? But unique blood only against any profit from specified business only. And if you can't set off, you can carry it forward indefinitely. Next, guys, there are some specific deductions. Just connect them to business. Insurance premium. Is it connected to business? Can you take a deduction? But just make sure you're not paying in cash. And whenever I say no cash, that means no CBC. No cross check, no bearer check, and no cash, of course. Cash, bearer, and cross check. Next, guys, bonus and commission to employees. Can you minus? Interest on loans. Can you minus? But interest on interest. Penalty. Interest on income tax. No. All right, guys. I am a master and paying to my slaves provident fund. NPS. Gratuity fund. Only thing in NPS is new. There's a limit of 10 and government 14. Guys, this is my contribution. But I have to pay. I have to pay. All right. Next, guys, can I have animals in my business? Yes, not important. More important, guys, can I have bad debts? Guys, bad debts can happen in your business, and if you have bad debts, the government says if you don't make money, we don't want any tax. So, will they allow you as a reduction? 7 lakh bad debt. Can I minus? Yes. 5 lakh recovered. It will be taxed in the year you recover it. Are we okay with this, guys? Yes. But if you want 7 lakh and the officer is only allowed 4 lakh, that means already taxed you how much, right? So if you recover any now bad debt recovery up to 3 lakh, will you be taxed again? You recovered 2 lakh 70. Nothing to do. 3 lakh 20. Only 20,000 will be added in PGBP. Are we okay with this? Next, guys, family planning expenditure. Is it allowed? Revenue expenditure, full. Capital expenditure. In as a pastry, guys. Remember, guys, how many parts? 5. But this family planning is great, helps control the population in the country, but only for which companies? Guys, if you go to Kurg, Mysore, etc., will you use the highway? And what will you pay? Toll. But guys, if you use stock market, also will you pay a toll? What is that toll called? STT and CTT. When you buy shares, when you sell shares, will you pay STT? Yes. In mutual funds, only one. That's why mutual funds, sahi hai. But guys, what is the point of discussing STT, CTT? Don't worry. If you've paid this amounts, we'll give you a deduction. But only if the share trading income should be where? In PGBP. If you put it in capital gain, we'll not give it. So guys, same to same. What's the shortcut, guys? Same to same. And there's a section called 37, guys. General deduction. That's it. Any deduction connected to what? Business and profession. Can I put it there? Yes, you can happily put it there, except to any deduction which is bad in law. Bad in law means illegal. Can you give me 2, 3 illegal expenses? Guys, secret commission, any bribes, any penalties, sorry, CSR expenditure. Who told you to do, guys? If companies told you to do, who am I? Income tax, I will not allow it unless it is SRE or FPE. So we've done incomes, we've done deductions, and now we will move ahead to disallowances and additional points in the evening batch, guys. I'll connect the video, watch this later on. Thank you so much. Alright, doing a revision of a chapter which is very important, tiny chapter, but can surprise you with some good marks in the exam. It's a chapter called Clubbing of Income, and it gets you about 4-5 marks regularly in the question number 2, 3, or 4. It's an optional question, but an option that will be very helpful if you choose. Let's try and recap, guys. Why is clubbing existing in India? Because sometimes in India we have different tax rates. Example, I could be at 30%, and my minor child, my spouse, my HUF, or my son's wife could be at a lower rate. So Indian government knows that there could be manipulation, and hence there is a chapter called clubbing of income. The main section in clubbing of income is which section, guys? Section 64, and it says that as an individual you can club your income with 4 people, guys. Can you repeat the 4 people first? You might club it with whom? HF. You might club it with spouse. You might club it with son's wife, and you might club it with a minor child. That means, guys, can I not send my income to anyone else? I can, but the government is okay with it. So if I transfer my debentures to my parents, can they earn interest? Will it be club? No. To a major child? Yes. Will it be club? No. To a friend? Yes. But will it be club? No, because the government knows we don't do that. Our main manipulation happens with these four people, and the government is aware. Let's start with the first person, that is minor children. Is are A1 are minor children A1 because the section is 64 1A. Repeat the sentence. Every income of minor child will be clubbed in the hands of the higher parent. Higher parent means in the exam, guys, when you have Mr. A, Mrs. A, and the minor child, first compute the income of Mr. and Mrs. A. Get the final number. One is 10 lakh, one is 3 lakh. Where will the minor child's income be clubbed? So the higher parent. Yes. Once you're clubbing, please be careful. There is an exemption of 1,500 per child, not per income, per child per annum whose income is being clubbed. But what if you're clubbing only 1,000 rupees? Then only 1,000 because that's the maximum, guys, income. In exemption cannot be more than income. But remember, 1,500 is forgotten by people. Guys, when you're clubbing, guys, please remember if it's a disabled minor child, there will be no clubbing because disability, first level, second level, no clubbing. Does that mean that disabled minor child will not be taxed? Yes, he will be taxed himself. And for sim income, what is sim income? Income from any skill, intelligence, and manual work. Skill means singing competition. Intelligence means a debate competition or quiz competition. Manual work means acting in a TV show. Guys, they will tell you only that income will not be clubbed. But otherwise, guys, every income of minor child will be clubbed. What if the income has another second level of income? Will be clubbed. Third level of income will is the minor child. Every level is clubbed in the hands of the higher parent. Once it's the higher parent, every year it's the same parent. And what if husband and wife have equal income? Then you can choose whichever parent is okay. If they're separated, then the one who's taking care of the child. And if the child has no parents, then a legal guardian. Are we okay with this? Guys, while we're discussing this, sim income we're done. Accretion is addition to income, guys. Remember, don't write the word addition in the exam, write the word accretion. Exemption under section 1032. And guys, if it's house property transfer, do you remember house property transfer? Which section will it go under? In house property section 27, they're also same. It will come back, but it will come back without any exemption of 1500. So 1500 exemption is where, guys? Only clubbing. Also remember, a minor married daughter is equal to minor child. Same provision as minor child, except in the chapter of income from house property. All right, with that, guys, we move ahead to section 64.1. Guys, what is 64.1 for? Transferring income to your spouse. Guys, generally in India, spouses are close to you, so you will try and manipulate by transferring those debentures to your spouse or transferring gold to your spouse. Guys, will the income come back? Yes. If you indirectly transfer, that means you transfer to the third party in the middle. Will the income come back? Still, yes. Guys, unless it is AS, you know AS. Unless your spouse has paid added consideration and unless there is separation, in that case, it will not come back. And what if you transfer debentures worth 10 lakh and she's paid you 6 lakh? And on 60%, there will be no clubbing. On the 40%, there will be clubbing. But in the exam, they say inadequate consideration or no consideration, then fully it will be clubbed back. Be clear. Is also very, very important. If you have substantial interest in any entity and that entity is paying what? Salary, remuneration, commission, charges, etc. To whom? To your spouse, that is to your wife, and it's not linked. What is the word, guys? Not linked. Will it be clubbed back in the hands of the entity? No, in the hands of the husband. Are we okay? Two things you have to check here in the exam. You should have what kind of interest? Substantial, and it should be what? It should be not linked. Remember, substantial interest is not just the husband alone, but along with the relatives. Now, what is relatives here? Clock. This side, spouse. This side, siblings, parents, and children. Perfect. Next, guys, if it's linked, what if it's linked, guys? Then it will not come back. And do you remember, guys, husband and wife both having what? Substantial interest in any entity and both earning what, guys? Salary, remuneration, commission, etc. Will it be clubbed? Whether it is linked or whether it is not linked, it will be clubbed in the hands of higher. So husband and wife compute their income, whichever is higher, we will add it to their income. Next, guys, asset transfer. This is also spouse only. Guys, can it be with son's wife also? Yes. So this is son's wife. Same. If you transfer the asset directly or indirectly, it will come back unless there is added consideration. What if your daughter-in-law has paid you added consideration? Then who's the real owner? Is the real owner, then it will not come back. And remember, guys, the relationship of spouse and son's wife should exist at two times. When you're transferring also, when you're earning income. Oh, that means it's a great idea. You've just got engaged, guys. Transfer all your assets to her. But it's risky. Yes, it's not a tax issue, it's a life issue. We've joked about it, remember that point. So relationship should exist at both the times. Next, guys, this is all 64.1 cross transfer. Guys, can there be two or more interrelated transfers? Example, I transfer to my best friend's minor child. Can it happen? and he transfers the income to my wife, guys. Can it happen like that? In that case, the government says these are two or more interrelated transactions which are done to avoid tax. In that case, they call it cross transfer. And will clubbing apply on the common amount? What if I have transferred 12 lakh, he transferred 10 lakh? 10 lakh. On 10 lakh, proportionately, we'll have to see what income, and that income will be clubbed. The minor child's income in his hand, my wife's income in my hand, with the respective relation. Are we okay with this, guys? Yes. 64.2. Clubbing of income with respect to HUF. Guys, can you transfer to an HUF? Why will you transfer your debentures to an HUF? Because HUF enjoys what, guys? Well, basic exemption limit up to how many lakhs? So great, it's a great idea, but it will fail because the government income tax act says that if you transfer an asset to whom? HUF, the asset will remain there, but the income will come back to the real owner. Dog always returns to its owner. Guys, what if the HUF is partition? Even if it's partition, who will the asset go to? Members. Still clubbing will apply and it will come back to the real transfer. Are you okay? And 1500 exemption is only in whose case, guys? Only in, okay. Some more things that you should know, guys. Whenever you do clubbing, exempt income will never be clubbed. So agriculture income, no clubbing. Share of profit from a partnership firm, not club. So remember these bits, very important. No tax, no clubbing. First, will you compute or will you add? Example, guys, you transferred house property. You will minus what? Municipal tax. Then you will minus what? Standard. Then you will minus what? And the final income will come back to the real owner. What if that person has some salary and you're clubbing it back? You'll minus how much? 50,000. So always repeat. Compute first and then club. Repeat. Compute first, then club. Any other important point? Yes. Accretion to income is addition of income. As addition of income is never ever club. So which level is club? Only the first level. Example, I gave a house property to my wife. Will the rental income be clubbed? Yes. Second year rental income? Yes. Third year rental income? Yes. Because it's the same first level. But from the rental income, she buys shares. And from the shares she buys, she gets dividend. Will that be clubbed? No, because that's called accretion to income unless that person is a minor child. Are we okay with this, guys? Yes. And we come back from the 64 section, which applies only to individuals. We come to a section called section 60 to 63, which applies to everyone. Guys, you are A, you could be everyone. And you're transferring an asset to whom? B. In fact, you're not transferring asset, you're only transferring income. FD remains with me, interest goes to someone else. Shares remain with me, dividend goes to someone else. Mobile card is mine, SIM card is someone else. Government doesn't like that. Will the income come back? Yes. The government says if you transfer income without transferring asset, will it come back? Yes. Guys, here we don't see any relation. Here it can be any, and you don't even see individual, it can be any person at all. Second 61, guys. In that, are you transferring income? You're also transferring asset, but what kind of transfer? Revocable means a fake transfer. Where you have the power to revoke. Remember section, sorry, shortcut RB. Where you have the power to revoke, or you have the power to enjoy the benefit. Power to revoke means do I have the power to take it back? Do I have to exercise that power? No, guys. Nuclear button you don't have to press. You know it's nuclear power. And benefit means what if I have the right to take back the income? Is that benefit? What if I can say the income goes to my mother? Is that a benefit? What if the benefit is 40%? Then is it revocable transfer? Up to how much percent? No. Even if it's 40%, even if it's part of full benefit, the transfer will be called what transfer? Revocable transfer. In revocable transfer, also the government says the fake transfer will clubbing apply? Yes. So section 62, you're transferring now the income along with what there is asset. Irrevocable. Narayan Murthy transferring his shares to an NGO. Irrevocable transfer. Will the dividend come back now? No. Clubbing will stop, but this will happen only in case of genuine, and the government also knows that. And 63 is all about defining revocable transfer price. You know what is revocable transfer? RP. Power to revoke. That means power to take it back. You may or not exercise the power. And second is power to enjoy the benefit. Enjoy means you get the benefit whether in part or in full. That's your chapter called clubbing of income. You can do all the sums after watching this video and reading your handwritten notes. And then open ICI papers, guys. Each ICI paper in question number 2, 3, or 4 has these 5 golden marks from this chapter. All the best and see you guys. Thank you.